What's going on, guys? In this April edition of Macro Crypto, we're going to be taking a look at some of the bigger fundamental stories, some of the technicals when we're looking at price movements, and also how some of the traders are trading on some of that information. But I also want to take a look at an old school approach of buying low, selling high on a number of different exchanges. It's a little bit underappreciated, and it's really how I got started with crypto. It's how a lot of people got started with this particular strategy. So I want to dive into that a little bit and give you guys a little bit of a framework to work with, as well as taking a look at some of the other bigger stories of the month. What's going on, guys? If you're new to the channel, my name is Clover. We're focused here on decentralized applications, trading, and other passive income opportunities. So make sure you're subscribed with bell notifications on so you don't miss out. I thought this was an interesting recent article that was just put out that talks about the boomer generation. It sums up a lot of the things that are happening right now in the global economy. They're talking about just the overall undervaluation of the cryptocurrency market. If you remember when Bitcoin went all the way to 20K, we had seen near $1 trillion market cap, and right now it's sitting at about 200 billion. And that's very, very low when you're kind of looking at the overall grand scheme of things. And one of the biggest triggers that this article talks about is gold cracking $1,800. This article lays out the scenario where Bitcoin hits $1 million, gold goes up, 3 to 5x in price in that same time period. There's a huge difference when you're kind of looking at the exponential rates of return in cryptocurrencies as opposed to perhaps some of the other traditional, more safe haven assets like precious metals. And so that may spur a little bit of an awakening with the boomer generation that has a lot more capital to invest in some of these types of markets. And I think that that is going to be something that may spur some innovation with some of the companies that are out there or are looking to be developed here in the future that will allow easy onboarding. Now, the boomer generation is more of an American-based market, and I think one of those triggers that may happen is when you see a lot of adoption from the Asian communities, more specifically China. And I thought this article was interesting. It's talking about IOST, which is a blockchain I've been very bullish on. They are joining the Chinese nationwide blockchain endeavor, so they want to be one of the leaders in blockchain technology. They're really moving forward with a number of different plans. They're coming out with their own digital yuan, and for IOST really to join that group, that's great news for IOST. Saw the price really spike as soon as that news came out. And I think that there's more implications for Chinese adoption, Asian adoption to come through much faster than, say, the American market. If you're looking at the American market, there's companies getting sued left and right when it comes to all of the stuff that's going on. I mean, Ripple is either constantly being sued or now they're suing YouTube. You have Vertasum, that was one where they were very integrated with everything that was going on with the SEC, and then the SEC still came back and started blocking their funds and doing a lot of different things with that. Telegram and their TON ICO has been like a big controversial one. So the US, in terms of their regulatory environment, it's not the best place for innovation. The Asian communities are a little bit more open and forward-thinking and have less restrictions and regulations in place, and that's why you see a lot of innovation outside of some of these larger frameworks. Overall, it's been fairly bullish for cryptocurrency as a whole. Now that leads me into the next thing I want to talk about strategy-wise when we're looking at swing trading, because this macro crypto series has been a little bit more focused on leverage trading, but I want to bring in an element of swing trading when you're looking at, just simply buying low and selling high. This is essentially just 1x leverage when you're looking at that. But there's a lot of opportunity with just the fluctuations and the volatility. You can pick up 5–10% here by just simply, logging into a number of different exchanges and just setting orders at certain price points. And so if you set up a spreadsheet, like that's one thing that I've done that'll calculate some of that stuff a little bit more automatically for you, so you don't have to always pull out a calculator and do some of the stuff. You can just kind of plug everything into a spreadsheet. And I want to offer some different things like that. But one of the things I feel is going to be good is once I get a little bit more of a strategy that I'm more comfortable with, and hooking that in with trading bots, and having the trading bots being able to kind of do some of those manual trades on exchanges. So I've been experimenting with a few different solutions, and I don't have one that I'm completely confident with right now. I have been talking about Keith Waring's Bybit bot, and so what I'm looking to do with this macro series is ultimately have trading bots logic that you're able to plug in, and you can set this up with leveraged trading exchanges as well as just your everyday exchange, and having different altcoin pairs that you wouldn't mind holding that particular coin, say if it drops quite a bit in value. And so there's certain blockchains and altcoins that I'm going to be looking to target and wanting to trade those pairs, and that's the idea that I have with some of this stuff. But there's still a lot of opportunity just with simply setting an order 10% below perhaps like what you bought a particular coin at, trying to pick it up at a cheaper price and then selling say 10% above. I mean, that's almost like a 20%, a little bit more than a 20% swing there, if you're able to buy 10% under the market and sell 10% above. And sometimes there are volatility swings that you're able to pick up some of those movements. And so I think that there's going to be some opportunity with that. And I'm working with a couple of different trading bots, several actually, but I want to find a workable solution that'll be able to do this a little bit more autonomously. But right now, I've left a number of different links to all these different exchanges that you can set up accounts with. And it's good to have just a little bit of crypto kind of spread around, and having an easy process to kind of maybe go through. And even if it's something where you're just going to check these once a week, you're just going to log in, see if your orders have been filled, set new orders, and you can kind of base some of that on some of the technicals if you'd like. But you could also just kind of look at what are the price trends, and perhaps even setting a few different orders at Fibonacci lines. It tends to be a popular strategy. So I want to go a little bit more in depth in that in future videos, but for now, that's just something I kind of want to bring to light, is setting up a number of different accounts with different exchanges, having some diversification with your assets, and having a process of going in at least once a week and setting low buy orders, and if you do have some crypto that you're working with, setting high sell orders on those as well. Overall, the sentimental analysis, when we're looking at the positions traders have been taking over the long term, everything's pointing to be a little bit more bullish. The fear greed index is an interesting one to look at. It's been under 20 for almost a month, and we're starting to see it just slowly, look like it's going to be breaking out of that trend, and that's a bullish sign for things overall. I feel as we get closer to the halving, which is in about 15 days, we'll see more price appreciation. We probably will get closer to that 9K level, and we're not going to see like a huge explosion in price once we get to the halving. It tends to be a little bit more of a delayed response if you're looking at the prior history of prior halvings, is that it was maybe 6 months after the halving is kind of when you saw a big spike in price. And so that might be something we see later on this year, maybe in the the fourth quarter of 2020 is, I feel, a good kind of time frame to look at for big spike in the overall market caps with crypto as a whole. Taking a look at some of the technicals, you can see here on the monthly that we are in 2 red months. This was after we had a pretty bearish trend really heading into the new year. Things just kind of turned around in late January and early February. We had a little bit of a bullish run, and then with everything kind of happening in the world economy, you saw it really tank. So that's kind of been the the macro trend. If we zoom out and now we're taking a look at the weekly, you can kind of see how there's been kind of overall, if we're just kind of drawing some trend lines, this is kind of heading down. But still with the overall sentiment, some of the news, I think there's a lot of positivity, and a lot of people are seeing cryptocurrencies as a hedge against some of the issues and problems with fiat. We come down a little bit more. Let's take a look at the 3-day. I do like this Wolfpack ID indicator, so you can get this on TradingView. And if we're taking a look at the money flow index, the MACD, and the Wolfpack, a lot of this stuff is starting to look bullish. Like it looked like we kind of turned a corner after we had this massive dump all the way down into the 3000s. So taking a look at the daily, basically since that dump, everything has really been slowly progressing up, and we've seen that that trend really kind of continue. And I think that we may see a spike up to the 9,000 levels or so, and that'll be a really interesting time period to kind of see how that holds. Do we have another retracement? Do we go up further from there? But everything that I'm kind of looking at right now, when you're kind of looking at the larger time scales, is that this looks like we're poised to move up, about 1,000 or 2, over the next month or so. So that's kind of what I'm anticipating. If you're looking at that in terms of positions, like if you're overall in a bullish trend, that's one of the reasons why I kind of like the buying low, selling high strategy with multiple different exchanges, and using that as a strategy along with low leverage trading strategies on say Bybit or BitMEX. If you look at my last video, I talked about some of the funding rates, the differences in funding rates between the different exchanges, and you can use that in your favor. So that's another reason why it's good to have a little bit of diversification, not only with the normal exchanges when you have a little bit of opportunity with price differences, arbitrage opportunities, or just some of the volume there, but also with the leverage trading exchanges. It's good to have maybe at least 3 up to like 5 different leverage exchanges where you can compare some of the funding rates. I'm going to be getting a little bit more into using Keith's Bybit bot to place some of the trades that I'm looking to do, and I want to do this a little bit more on longer time frames. And so when you kind of bring some of that in, it's going to identify long trends and short trends. So I'll show you that here. So this is what's useful about Keith's Profit Sniper indicator, is that it identifies some of the moving average trends, and it's basically looking at what is the macro trend, and that's what the Bybit bot is trading on. So you can use this for manually trading as well. If you see a long trend, you can look at purchasing cryptos not only with Bitcoin but with other altcoins, and then once that trend switches, that might be a good time to exit your positions and basically tether up. The other time frame I like to look at is the 8-hour and then the 6-hour. That gives us a little bit of a better indication in perhaps the more short term. So you can see that this is given us a long-term trend when we're looking at the 8-hour. We switch this to the 6-hour. It looks like in the short term, and that's the way this is set up. The green and the red on here are going to be more short-term time frames. And so the purple and the blue are looking at the longer time frames. Right now, it's on the 30-minute. And that's the way that it's interpreting some of that data and what it's using to base these positions on. So it's giving an overall short-term shorting trend on 6-hour. Now the other thing to keep in mind is that if these trends don't play out, like say we get into a shorting trend and that doesn't necessarily play out, or it doesn't go down a whole lot, that's pretty bullish. And so you want to look at that as well. If one of these trends don't tend to play out, it tends to be very good for the opposite trend once that triggers. If you're interested in Profit Sniper and getting involved with the Bybit bot, I'll leave a couple of links to some of the videos that I've done recently on that. So that's a really cool option. Other than that, I'm really going to be diving more into some of the exchange trading bots. I have a number of different ones I'm looking at, and I have some experience with working with some of these. So when I get more set up with that, I'll do some videos and some tutorial videos on setting some of that stuff up. But I think that can be a great way to automate some of this stuff if you're just looking to, say, deposit on particular exchanges and just work with the bots and working with some of the algorithms that they are using to put out trades. So Curious to hear your guys' thoughts. Let me know what you guys think in the comment section below. Be sure to like and subscribe, and I'll catch you guys in the next video.